to your life insurance. Stewart Welch is here today with some life insurance mistakes that people do make that can be very upsetting in many situations. Stewart, good to see you.
Good to see you, Joe.
When we started talking about this, Stewart, tell us the story of something that happened 25 years ago, right?
It was. A lady came in my office and she was very distraught. Her husband had just died of a heart attack, and the good news was he had like $1 million life insurance policy. The bad news was that he had named the estate as the beneficiary. He had named.
Why would he do that?
Well, you know, there's a lot of reasons. We see a lot of people name the estate as a beneficiary. Sometimes the insurance agent fills the estate out as a beneficiary and, you know, says we'll figure that out later.
And so you don't go back to it.
And they don't.
Okay.
And they don't do it. And so, if he compounded the problem by not having a will. So if you don't have a will and the estate is the beneficiary, it means that the state of, in this case, the state of Alabama determines where the assets go.
Wow.
And in this case, in Alabama, half of the money went to their 9-year-old child, who's a minor and can't receive assets. And so the court appointed an attorney as like the trustee of those assets until the child reached 19, and that trustee would not allow him to use those assets to benefit the child.
So they couldn't live on it in the meantime.
They couldn't live on it. So
she ends up selling the house.
She ends up selling the house, she hadn't worked in, this guy was a high-income salesperson.
Yeah.
So they had a big house with a big mortgage. She had to sell the house. She had to take a low-income paying job to try to just make ends meet. And then the worst thing is when the child turned 19, which is the age of majority in Alabama, he got like $750,000. You can imagine how that played out.
Yeah. Okay.
Not
So
fun.
that is just one scenario. So the point of that story is, what do folks need to do who are watching right now?
Well, I think the first thing is when we get a new client, what we'll find is about half the time that something is wrong in their beneficiary designations. I was relating to you a story, this is more recent, where we had someone die, and it turned out that he had his ex-spouse on his, in this case, a checking account. And they had been divorced for 20 years.
That is more complicated than
That is very complicated.
Yeah.
So another example would be you have a lot of people name the spouse as the primary beneficiary, but they'll name the children as the contingent beneficiary. And if the spouse predeceased the insured, it means the children now become the primary beneficiary, and if they're minors, we have the same problem where you have to appoint a custodian.
So the majority of the time, they wouldn't mean for that to happen. They would want the family to live on whatever the insurance policy was.
Absolutely.
So what do? You go back and look at your policy, get with your persons, what you're saying?
Yeah, you need probably, here's about 50% of the time we find somebody's made a mistake. So what you need to do is you need to review your beneficiary designations of your life insurance. You need to review your beneficiary designations of your retirement plans, particularly the contingent beneficiaries, the ones after the primary. And also we would recommend that you look at ownership, you know, of property. Sometimes we'll have the ownership of property messed up.
Okay. All right. Just a reminder today to check on those things. Good to see you, sir.
Thanks a lot.
All right. We'll take a break. We'll be right back.